I just bought two stocks for my dividend growth portfolio and I want to tell you about them. I bought these stocks with dividends collected from other companies in the portfolio. That's one of the great pleasures of dividend growth investing, compounding dividends by reinvesting them. Hi, my name is Dave Van Knapp with the Dividends and Income channel. Before I get going, I'd like to ask you that if you appreciate this content, please click the thumb up button, subscribe to our channel, and ring the bell for notifications about new videos when we release them. Thank you. As I've described in previous videos, I maintain a dividend growth portfolio for demonstration purposes. I want people to see and to understand what they can accomplish by using the dividend growth strategy. The portfolio right now has about $160,000 in it and consists of 28 stocks. One aspect of managing a portfolio of stocks is, what do you do with the dividends? If you are in the accumulation stage of your life, as I bet most of you are, you probably want to reinvest your dividends. The reason to do that is to compound them. Compounding means making money on money already earned. You've already earned the dividends. They were sent to your account and they're sitting there in cash. When you reinvest them, you begin making more money from them. That's compounding in a nutshell. In my dividend growth portfolio, I reinvest dividends once per month. I let incoming dividends accumulate in cash for about 4 weeks. Then in the middle of each month, I pick out a nice addition for my portfolio. Since my last reinvestment in April, incoming dividends accumulated to $623. So on Tuesday, May 18th, I went shopping. Here's how I decide what to buy. I hold a derby among a few viable candidates. The starting field includes stocks I already own, as well as stocks that I don't own but would like to own. In the derby, I consider my usual factors: quality, yield, dividend growth rate, valuations, and how the stocks would fit into my portfolio overall. This month, I had a starting field of 9 stocks and 1 ETF. When the derby was over, I decided to split my purchase money. I decided to buy 2 stocks. That's the first time in the history of the portfolio, which is 13 years, that I have split a dividend reinvestment. There's nothing fancy about it. I just decided to break the money down that way. My first stock to add is Lockheed Martin, ticker symbol LMT. I already own Lockheed Martin, having bought it twice last November and then again this January. Here is a summary of the company. Lockheed Martin is a giant company. It's in the industrial sector and in the defense industry within the industrial sector. It yields 2.7%. It has a very nice dividend growth rate of 10% per year over the last 5 years. It's increased its dividend 18 years in a row. On my quality snapshot scoring system, it gets 22 out of 25 points, which I call a B+. Currently, its valuation is a little undervalued, about 9%. And I said I already own it. It currently occupies about 2.2% of my dividend growth portfolio. This price graph comes from Fast Graphs. The 3 green dots on the price line show my earlier purchases of Lockheed Martin, and the purple dot at the end of the line shows my purchase on May 18th. This table summarizes the purchase. I bought 1 share of Lockheed Martin. Its cost was about $393, and by buying it, I increased my annual dividend stream in the portfolio by about $10. After making that purchase, shortly after the market opened on May 18th, I still had $230 cash available in my portfolio. So I made a second purchase with that money. My choice for the second stock is Merck, ticker symbol MRK. Here is Merck in a nutshell. Once again, it's a mega cap stock, very large company in the healthcare industry. You probably all heard of it. Currently, it has a yield of about 3.3%. It has a 5-year dividend growth rate of 6% per year. It's been growing its dividends for 10 straight years. Its quality snapshot is perfect, 25 out of 25 points, A+. By my estimation, it's way undervalued at this time, 18% discount. And this is a new stock in the portfolio. So before I add the shares that I'm just bought, its position in the portfolio was 0. By adding Merck to the dividend growth portfolio, the portfolio now moves from having 28 positions to having 29. The green dot at the end of the black price line on this graph marks my purchase. And here's the summary of the purchase. I was able to buy 2 shares with the money I had left over from the Lockheed Martin purchase. The total cost to me was $158, and the annual dividend that will add to the dividend growth portfolio is about $5 a year. Here is how the Lockheed Martin and the new Merck positions will appear in my portfolio table when I update it at the end of this month. New information is highlighted in yellow. Lockheed Martin, the number of shares will move from 9 to 10. The value of Lockheed Martin in the portfolio goes up by the amount I spent for that 1 share. That kicks Lockheed Martin up to about a 2.5% proportion of the whole portfolio. And the annual income from Lockheed Martin goes to $104 a year. Merck is a new position, so all the information is yellow highlighted. It's all new. First year in the portfolio, 2021. Current yield, 3.3%. Number of shares goes from formerly not being there at all to 2 shares. They cost me $158, as you've already seen. The percent of the portfolio is minimal, just 0.1% at this time, and the annual income from that Merck purchase will be $5 a year. Merck is obviously a small starter position at the current time with just the 2 shares. That's fine. That's how you build up a portfolio when you don't have new money coming in from the outside, which I don't. The only money coming into this portfolio is the dividends that it collects. So I'll be looking to build that position over the coming months when the price is right. In that regard, as an accumulator of Merck shares, I will not be rooting for the price to go up. Isn't that weird? But as Warren Buffett has said, the logic of accumulation is simple. If you're going to be a net buyer of stocks in the future, and I intend to be a net buyer of Merck shares in the future, you are hurt when stock prices rise, and you benefit when they swoon. Because emotions, however, most people take comfort in seeing prices go up. Warren Buffett is famous for a lot of quotes, and over the time I will use some of them in these videos. To me, that's one of the most important quotes from Warren Buffett, the concept that if you are accumulating shares, you're actually better off if their prices don't go up. Long term, of course, I'm human, subject to the emotions. I want Merck's price to rise along with its earnings and its dividends. But in the short term, over say the next year or 2 in the case of Merck, I'd be happy to see it remain dead money, i.e. its price remaining more or less flat, in the market while I accumulate my shares. Okay, there's one last thing that I want to show you, which is the immediate impact on my portfolio's income of the 2 purchases that I've described in this video. This table shows the income run rate from in my dividend growth portfolio before I purchased Merck and Lockheed Martin and after. The additional shares that I just bought will add $16 to the portfolio's annual dividend flow, which is about a 0.3% increase. I know that $16 a year sounds very small, but don't laugh at it. Here's the deal. If I make 12 reinvestments per year, 1 a month, which is what I do, and if they each add about the same amount to the dividend growth portfolio's income, that amounts to more than a 3% increase in income over the course of a year without me doing a thing other than making those dividend reinvestments. In other words, even if all the other stocks in the portfolio don't raise their dividends at all in the next year, I nevertheless will receive a 3% income increase over the course of the next 12 months. And that is compounding in action, making money on money already earned. And that was my dividend reinvestment for May of 2021. Just a housekeeping note. After the purchases, I still have $72 left in cash in my dividend kitty. That rolls over to June, and it will contribute to next month's dividend reinvestment. And that brings us to the end of this video. Please remember to hit those buttons. The reason I ask you to do that is because it helps us to finance these videos and continue to bring more content like this to you. I'll be back in about a week with a report on my dividend growth stock of the month. Thanks again, and bye everybody.